Okay, so some very bullish news for Hyperliquid for the HYPE token that I'm going to explain in today's video. So let's get into it. So within the Hyperliquid ecosystem, we've all been waiting for precompiles. If you're a tech guy, then you know what precompiles are. We've been waiting for this to come on over to the Hyperliquid ecosystem.
One great project is Kinetic. I'm not an investor, I'm not associated, and also not paid to say this, but one project, Kinetic is building liquid staking, which is totally on-chain. So they have a fair mechanism for allocating two validators based on a scoring metric, which is called stake hub. And they have various metrics. They read from on-chain, score validators, and then on the other side, they have a smart contract, which accepts HYPE and allocates it to these validators without any human interaction involved. So it's actually totally on-chain, totally permissionless, and I would say very true to the ethos of wider crypto. They're not live yet. It's probably one of the most hyped projects on HyperEVM, and they're at the moment blocked by the right precompiles coming to mainnet.
But just now, as of yesterday, they have announced iHYPE. So Kinetic is introducing the first fully institutionally focused liquid staking solution for the Hyperliquid ecosystem, right? And this is very huge. So Kinetic, which is a company, is pleased to announce the development of iHYPE, a dedicated institutional liquid staking product designed to meet rapidly growing institutional interest in HYPE, right? Institutions are feasting over HYPE. They really want to get involved with the HYPE token. They see the future. They see how big the potential of this platform is. So everybody is trying to get in on HYPE. It's not just retail. It is now big institutions, big investors, and huge firms. So essentially, Kinetic, as you just saw in that video, they are utilizing the precompiles tech and they are creating a liquid staking solution for these institutions, which means they will be able to have access to the HYPE token. You can think of this as the ETF moment for Bitcoin that allowed all these huge, big investment firms to easily deploy capital into Bitcoin. And we've seen the ETF flows ever since. Billions and billions of dollars have rolled into Bitcoin because it enabled that to happen, right? And now we are seeing a similar kind of thing for HYPE made by Kinetic. So this is a big deal for everybody involved in the Hyperliquid ecosystem, and they are going to be engaging with IMC Trading and Flowdesk. Flowdesk being a big market maker within crypto, and IMC Trading have been operating for many years, since 1980s, I believe. They've been a trading desk, and they have headquarters all over the world, and they are a big deal. So they are a big deal, managing billions of dollars. So let's look into this. The development of iHYPE represents a significant expansion of Kinetic's liquid staking offering and is intended to provide institutional investors with compliant enterprise-grade access to Hyperliquid's native staking yields, meeting market demand. Kinetic has received substantial inbound from funds and allocators looking to secure auditable, institution-friendly infrastructure to participate in HYPE's unprecedented growth. So let's take a look at this, right? So why can't institutions just go and buy HYPE and stake themselves? Well, it's due to liquidity and market impact. So when you try and buy a token, sometimes you get that little error on Uniswap that says price impact, right? And that's due to slippage. So think about this. Institutions, what do they have? They have billions and billions of dollars. So they cannot just come onto the open market like you can and buy a token because they instantly shoot up the price. And the problem with that is it means they don't get a good price because they're pushing the market against themselves. So their order does not get filled at a good price, right? So that's what happens. They cause a spike in the price and they get inefficiencies and they don't get a good deal. The more they buy, the worse deal they get. And that is called slippage, right? So the next reason is because of compliance and custody requirements. So institutions, they are a firm, they are a legal firm, they have strict rules. They can't just throw funds into a wallet and stake like you can, right? They need qualified custodials to securely hold their assets. They need regulatory compliance, right? They need to KYC and have reporting because it's a business at the end of the day. And they need enterprise grade validators that they trust, not random ones from the public, right? And this is where Kinetic steps in, because Kinetic offers all of these things. They are already staking massive amounts of hype, so they can offer that without price impact. Due to the precompiles and them being able to use oracles to find the best validators and securely stake within them, fully decentralized, fully on-chain, they have qualified custodials and regulatory compliance and integrate validators as well. And that's the last point. These institutions, they don't operate with complexity, right? They can't be setting up staking, especially across a decentralized network. It's very messy. They can't be managing wallets, validator delegation, and network participation because it takes a lot of technical work. Institutions prefer a nice packaged solution with everything neatly, which is what Kinetic offers. Right, so you might be asking, what is liquid staking? So regular staking, which you'll all be familiar with, is when you stake a token like iHYPE. Usually you're locking it up to help secure the network and earn rewards. Right, so you have your token here and you delegate that token, you stake it. Now you no longer have access to this token because it is locked in here, earning you rewards. However, with the revolution of liquid staking, it fixes that problem of being illiquid. So now when you stake, you receive a staked token. So when you stake your token here, what you get back is a staked token, right? So when you stake your token, you are receiving back the receipt token. So that proves that you've staked. You still earn rewards just like normal staking, but it can also be traded, sold, or used in DeFi while your original tokens are staked. This part being crucial because this means you can unlock more yield, right? So you could like be staking your token somewhere, and then you can take this token and stake that somewhere else, and now you're earning double the yield. So essentially it's this. Right here. Your money is locked in a vault, earning you rewards, but you get a copy of the key that you can use elsewhere. And institutions love this because they want liquidity, right? That is what they work with. They work with liquidity. They want to be flexible. They don't want to get stuck. Liquidity staking lets them earn real yield without giving up control or tying their funds up for long periods of time. And it gives them a way to report, track, and move their investments more easily on the balance sheets. Right, so this is a big green light for investors, institutions that want to get involved. Now, what are some of these institutions that want to get involved? So the first one that we've got is IMC Trading. And IMC Trading, I just took a look at their Wikipedia real quick. And they are a private company that has been investing for 36 years, right? These are the two founders. They have headquarters in Amsterdam, Chicago, Sydney, and Mumbai. And they are serving worldwide. They operate in high frequency trading and market making, and their operating income as of 2022, so this information is a bit old, was 1.5 billion, right? Net income 506 million, total equity 1.1 billion. Okay, number of employees 1,300. I think that's now increased up to about 1,500 or 600. And IMC Trading, they apparently have a portfolio of 176 billion, which is a lot of funds. And now we also have Flowdesk, and Flowdesk finalizes a 102 million equity financing round with extension from HV Capital and debt from BlackRock managed funds to accelerate global expansion. And Flowdesk is a Series B company raised in Paris, France, founded in 2020. It's a crypto liquidity pool for digital assets marketplace. And they have raised 172 million in funding from investors such as Cathay Innovation, Agley Ventures, and Eurozo, and with a current valuation of $250 million. So these are the two companies that they are starting with, IMC Trading and Flowdesk, as well as one of the largest qualified custodials serving the crypto industry. So this is a very big deal. You can read the press release here, but there's not too much to read. You can check out Kinetic on Twitter, see any more updates. But this is really bullish. This is really, really bullish what's going on here. We are seeing hype become institutionalized. And this is huge because it's exactly what the crypto ethos stands for. Hyperliquid represents what we all got into crypto for initially. Decentralization, power to the users, control of our own finances, we hold our own keys. And now we have essentially an on-chain Binance where we no longer need to use centralized exchanges. We can do all of our perps trading, all of our leverage trading, longing and shorting, buying coins on spot, trading all on chain, all on Hyperliquid without needing to ever touch a place like Coinbase or Binance. This is absolutely huge, and it's literally taking market share of them. So now seeing institutional money flow into this could get quite wild quite quickly. So I hope you like this Hyperliquid update. Like the video, subscribe if you'd like to see more crypto content like this.